Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is March 19th, 2025. Good morning, everyone. I'm delighted you could join us as we steer through the labyrinth of market activity, investor sentiment, and global economic shifts. Let's dive right in.
Let's start with a quick market overview that brings us right up to speed. The S&P 500 is trading at roughly 5,647.99 with a modest gain of about 0.277%. Over in the Dow Jones, the blue chip index stands at approximately 41,819.3, having climbed nearly 0.495%. Meanwhile, the Nasdaq has been pushing higher, currently trading around 17,647.5, with a rise in the neighborhood of 0.326%. Not to be left behind in the digital realm, Bitcoin has surged to nearly 84,197.17, registering a robust gain of just over 1.8%. And in the ever-volatile world of Ethereum, the price is up significantly at just over 2,029.8, an increase of around 5.076%.
These numbers may seem small at first glance, but they represent underlying themes of cautious optimism and slowly growing momentum across traditional equity markets, as well as in the cryptocurrency space. Sometimes, even those fractional percentage increases can hint at bigger, underlying structural shifts. Think about it. When Bitcoin steps up by nearly 2% and Ethereum by more than 5%, it sends a signal across investor circles that the appetite for risk or potential, depending on your stance, is once again peaking.
Let's now shift gears and delve into some of the major market trends that are making headlines. One of the stories making waves right now is about XRP. Yes, you heard that correctly. Ripple CEO Brad Garlinghouse has taken a bold stance by declaring that the SEC is no longer pursuing its appeal in the lawsuit against their company. This announcement has sent ripples, no pun intended, through the digital currency community, driving a surge in XRP's value. It's a landmark moment for what has been one of the most polarizing cryptocurrencies in the market, considered by many as an outlier in a sea of tokens. When a regulatory body like the SEC seemingly shifts its position, it doesn't just lift investor spirits, it also forces a reevaluation of risk throughout the crypto sector.
Now, while many investors are still digesting the XRP update, another story has been generating thoughtful discussion among strategists. Global strategist Victor Schvetz from Macquarie recently posed an intriguing question on whether U.S. stocks should continue trading at a premium to Chinese stocks. To put it in perspective, the S&P 500 is currently valued at around 20 times earnings compared to China's market, which sits at about 11 times earnings. That enormous valuation gap has long been a topic of heated debate in boardrooms and investment clubs alike. Schvetz reminds us to always scrutinize if these premiums truly reflect global economic fundamentals or if they're tied more to market sentiment and structural advantages. It's a question that not only challenges conventional wisdom, but also forces investors to reconsider asset allocation amidst a shifting geopolitical climate.
Another lively discussion in the market involves none other than Jim Cramer's top 10 things to watch today. At the forefront is Nvidia, whose latest roadmap is designed to secure its dominant position in the tech landscape. Investors and analysts are carefully watching Nvidia's strategic moves, especially as the energy patch continues to evolve. It's an exciting time as the energy and technology sectors seem to be dancing in synchrony, one fueling digital innovation and the other grappling with the global push for more sustainable practices. While these moves might appear technical at first glance, they have far-reaching implications, influencing everything from supply chains to employment trends across continents.
On a similar note, Boeing has made headlines with its shares taking a noticeable leap after CFO Brian West provided an upbeat outlook. According to Mr. West, the aerospace giant is easing its cash burn this quarter, and there are early signs that its factories are experiencing improvement. This positive news can't be understated, as every incremental step in operational stability at a company like Boeing has ripple effects on the larger market, especially in the industrial and defense sectors. Investors are taking comfort in these signals, even if they sometimes come with a side of cautious optimism.
Now let's take a deeper look at these stories in a more comprehensive manner. The XRP story, for instance, is not just about a surge in a digital asset. It's about a potential shift in the regulatory landscape of cryptocurrencies. Brad Garlinghouse's public announcement that the SEC is dropping its lawsuit appears to represent a turning point for Ripple. Many market watchers believe this development could set a precedent for how similar cases might be handled in the future, possibly paving the way for broader institutional acceptance of digital currencies. As we watch the market, one has to wonder, could this be the beginning of a new era where cryptocurrencies are more integrated into traditional financial systems?
Then there's the thought-provoking discussion brought forward by Victor Schetz regarding the valuation disparities between U.S. and Chinese stocks. This isn't just an academic debate. For those of you who are deep in the trenches of investment, the question is very real. Is the premium on U.S. stocks justified given the macroeconomic environments on both sides of the Pacific? Part of the answer might lie in the unique characteristics of the American market, its legal protections, its regulatory framework, and the innovative drive that many of its companies possess. But on the other hand, as China ramps up its technological and financial sectors, the appeal of their market valuations at around 11 times earnings grows ever more tantalizing. Are we on the precipice of a valuation recalibration that might force investors to reconfigure their global portfolios? It's a debate that could very well define investment strategies for years to come.
Jim Cramer's Top 10 Things to Watch also offers a palatable mix of hot-button issues that range from sustaining technological leadership to making crucial decisions in the energy space. Nvidia's progress isn't happening in a vacuum. Its ability to maintain market dominance is deeply interconnected with trends in artificial intelligence, gaming, and even data center operations. As Nvidia navigates these varied landscapes, it reminds us that the business of technology today is nothing if not multifaceted. Sometimes an investor might get a chuckle wondering if Nvidia's roadmap could double as a treasure map to the next frontier in innovation. A bit of humor shared by folks at the dinner table and on trading floors alike.
Boeing's news, meanwhile, serves as a signal of potential resilience amidst industry volatility. When an aerospace titan reports easing cash burn, it reassures investors that even in turbulent times, there are opportunities to find stability. CFO Brian West's comments have sparked optimism that Boeing can eventually emerge stronger from its recent challenges. And while it is always wise to temper enthusiasm with caution, there's an underlying sentiment in the market that attributes Boeing's bright prospects to a clear-eyed look at operational improvements and the balancing of supply and demand in the global aerospace industry.
Now, shifting towards a detailed sector analysis, let's start with the technology sector. Technology is undoubtedly the powerhouse of modern investing. With companies like Nvidia blazing trails and cryptocurrencies like Ethereum sparking significant gains up over 5% today, one cannot ignore the ripple effect technology has on the economy. Digital transformation continues to pervade every aspect of our lives, from the smartphones in our pockets to complex data processing systems driving business innovation. This sector is prone to rapid fluctuations, and even small percentage moves can have large impacts due to high valuations and investor fervor. So as you assess your portfolios today, ask yourself, how well positioned am I for a future where technology continually disrupts the status quo?
In the energy sector, the emphasis on investment in the so-called energy patch remains very prominent. While traditional energy companies still dominate a significant share of the market, there's a growing appetite for alternative sustainable energy ventures and renewable projects forging ahead. Jim Cramer's discussion on where to invest in the energy patch isn't just a fleeting mention, it underscores a broader transformation. As geopolitics, environmental policy, and technological advances converge, the energy industry itself is undergoing a vibrant transformation. It certainly makes one ponder whether the future is in fossil fuels, renewables, or perhaps a blend of both. And let's be honest, who wouldn't enjoy a little spirited debate over the next big energy breakthrough?
On the financial front, the discussion around valuation disparities, like those highlighted by Victor Schetz, creates a fascinating narrative about relative market strengths. Traditional financial markets, such as equities represented by the S&P 500 and Dow Jones, are often seen as beacons of stability. Yet when you weigh these against emerging markets and the dynamic shifts in the global economy, the discourse becomes far more layered. It raises questions regarding sustainability, profit margins, and growth prospects across varying jurisdictions. For many investors, these market comparisons are not just numbers on a screen, but rather a call to delve deeper into understanding the macroeconomic forces that shape global wealth generation.
Bringing the discussion to global market implications, it becomes clear that while each region presents its own set of opportunities and challenges, interconnectivity is at an all-time high. What happens in one part of the world resonates globally. For example, regulatory shifts affecting XRP do not only impact crypto enthusiasts in Silicon Valley, but also trigger ripples across emerging markets and even hedge funds in far-flung regions. Similarly, the debate over U.S. versus Chinese market valuations is a critical reminder of how deeply intertwined our global financial ecosystem has become. As trade wars ease or intensify, As policy changes ripple across borders, markets quickly adjust, often with significant implications for investors with diversified portfolios.
Expert insights and predictions from prominent voices in the financial industry offer a window into what could lie ahead. Many analysts believe that today's moderate gains observed in the traditional equity indices suggest cautious optimism. However, such small increases should not lull us into complacency. While the S&P 500, Dow Jones, and Nasdaq are on a gradual uptrend, the story behind the numbers is multi-layered and fused with geopolitical tensions, technological breakthroughs, and, yes, even a touch of regulatory drama as seen in the XRP saga.
In fact, some experts posit that the potential for further gains in the cryptocurrency market is substantial, especially if regulatory environments continue to become more accommodating. The contrast between modest equity index gains and significant jumps in digital assets like Ethereum raises a series of questions. Could unfavorable conditions in one sphere drive investors more enthusiastically into another? And how long before underlying macroeconomic factors either reinforce or upend these trends? These are the kind of reflective inquiries investors should be entertaining as they navigate their day-to-day decisions.
Now, before we wrap up, let's inject a little bit of humor into this deep dive. I once told a colleague that trying to predict the market is a bit like trying to nail jelly to a tree, impossible, yet surprisingly entertaining when you finally get a good grip. And while our conversation today is steeped in analytics and figures written out in words, let's remember that even the weightiest of topics can benefit from a dose of levity. After all, a good laugh can sometimes clear the fog of market uncertainty, if only for a moment.
As we conclude our discussion today, let's recap a few key takeaways. The traditional equity markets are showing modest gains, suggesting a quiet but persistent optimism on Wall Street. In contrast, digital assets, Bitcoin, and especially Ethereum, are experiencing more robust growth, potentially underscoring shifting investor preferences or unveiling new horizons where emerging technologies play a pivotal role. Meanwhile, major news like the regulatory pivot in the XRP case and the contrasting valuation debate between U.S. and Chinese stocks have added layers of complexity to the current market narrative. And don't forget the notable improvements in operational outlook, as exemplified by Boeing's optimistic signals from its CFO.
Our sector analysis makes it clear that technology remains at the heart of this transformation, though energy and finance continue to evolve in their own unique ways. And globally, the interconnectedness of these trends reminds us that every market shock, every regulatory announcement, and every valuation debate carries repercussions that are felt across continents.
I invite you, our seasoned investors and enthusiastic traders, to ponder these developments as you curate your portfolios. Ask yourself, are your investment strategies adaptable enough to respond to this shifting multi-asset environment? Could the moderate but steady upward drift in traditional markets be a precursor to larger corrections, or is it a sign of sustained growth? And if we consider the exuberance in digital assets, are these gains sustainable, or might future regulatory shifts change the narrative once again?
I'd love to hear your thoughts on these questions. Don't hesitate to reach out with your insights or even a humorous analogy that sums up your market mood. Remember, our AI co-pilot at Pantheon AI is always available to help crunch the numbers or answer your burning questions. Whether you're a veteran investor or just beginning your journey in the markets, every question is worthy of exploration.
As we bring today's episode to a close, let's remember that investing is as much an art as it is a science. The market may at times seem unpredictable, almost as unpredictable as my attempts at humor during these discussions, but one grain of truth remains. Being informed, questioning trends, and staying engaged are the keys to success in this fast-paced environment. And if there's one thing I can say with certainty, it's that learning shouldn't feel like a full-time job.
Thank you for tuning in this morning. Be sure to join us again tomorrow for another in-depth episode of the PAI Morning Briefing. Until then, keep your eyes on the trends, your minds open, and remember, you can always ask questions to our AI co-pilot at Pantheon AI. We're here to ensure you have all the insights you need in this ever-evolving market landscape.
Stay informed, stay curious, and most importantly, stay invested. Have a wonderful day, everyone, and until next time, learning shouldn't feel like a full-time job.